Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 in-minutes futures for the session of 5th of August. So in this video, I'm going to show you the market recap on the last session, plus trade reviews in the 3 minutes time frame, which I will include the entry, exits, and the rationale behind. And in one of the trades, I will focus on how I actually miss out on a potential reward to risk ratio of 4 or R multiple of 4 from a pretty textbook style uptrust after distribution setup by having a very strong direction and bias. And going forwards, I will cover the bias, the key levels, and also the potential setup for the session later. All right, so let's just get started. As we can see in this S&P 500 daily chart here, yesterday, as expected, was another bullish day. We didn't really have any kind of the threatening price action. So in fact, the volume looks pretty normal. And just right after we have this kind of the demand tail tested the prior swing high here. That's the prior swing high turn support levels. And subsequently, we have seen S&P 500 trend up and close at the high. I think we closed at about 3,300 level. All right, so let me just get down to the hourly time frame to have a clearer view. As we can see in this hourly chart, just prior to the US opening session, pretty much we have a very tight range. So we can see that this is the previous day close there. And subsequently, during the Asian session, we have a very tight consolidation near around 3290 level. And subsequently, we have an attempt to break out on this bullish bar here and followed by a sharp reaction during the London session. And eventually we have tested this supporting area, which I pointed out in my video yesterday. The supporting area formed by the previous swing high level was from 3273 to around 3285. So that was the supporting area formed. And we can see that just right after it tested the supporting level and at the US opening session at 9:30 p.m. my time, and it actually just rally up and consolidation followed by a very firm close. And currently we have a rally up here, and it looks like we are having a reaction right now. It's possible to have a test at the round number 3,300 level before we can continue to move up to test the all-time high level. All right, so let me just get down to the 3 minutes time frame to talk about a few of the trade. So one thing that I would like to focus on this trade review session on today is just that I would like to talk about having a bias when we do the day trading or even the swing trading, no matter what. So yesterday, I was kind of like having a very strong bias because everything just looks very bullish, and we didn't really have any kind of the bearish sign. So everything just looks good. So I will just stick to my bullish view. And although I did anticipate some kind of the potential short entry, but well, I do think that my strong bias do block me from analyzing the chart properly, and also just miss out great opportunities formed during the London session or European session. First of all, let me just have a quick analysis about the potential trade which I miss out because of my strong bias. So we need to take a look at the previous US session, which was here. So that was the previous session here. So this trading range formed at around 3295 and the lower bound is from around 3285. So how it actually started was based on the previous US session. So we can see there is a push up, a strong rally up, and then followed by a reaction. And eventually we have seen this kind of the shortening of the truss. So, and eventually that actually becoming temporary of the reaction, which comes on this. So this was the reaction. And this is kind of like a buying climax range, and eventually just form here the buying climax, and then subsequently we have a automatic reaction, and then followed by a trading range phase A, testing B, testing B, testing B again, and eventually this is really a pretty much textbook style of the uptrust distribution. So we can see that this is the prior resistance level, and we have an attempt to break out one times, and then the second times we actually see some serious failure here. Let me zoom in what I actually mean by obvious failure. So now that we can see the volume very clearly, I think it will be a lot easier to analyze together with the volume, because in terms of the structure, we have seen this kind of the uptrust after distribution. So this is the previous swing high level, that's the resistance. So first of all, we have this kind of the bullish bar with a very decent volume, and look at the subsequent bar here. So first of all, we have seen the rejection tail, although it's not that threatening, but look at the volume here. So this is the effort versus results based on the Wyckoff's law. So we have the, first of all, we have the effort to push a price up and result with this kind of the big spread bullish bar. And subsequently, we have an even greater effort here. Just look at the volume, is higher than the previous bar. And what's the result here? So the result is actually a smaller candle with a rejection tail. And in terms of the intent, it didn't really commit above this resistance level. So this is the first failure. And that comes with the increasing of the volume, increasing of the supply. And subsequently, we have another attempt to break out, because this reaction followed by the failure isn't that great. It's kind of like very shallow, and then we have another attempt here. So look at the spike of the volume. So this is an even greater effort to push the price up. And although we have a close above the resistance level at 3295, but look at what happened next. So immediately we have another failure. So that actually comes with a relatively high volume as well. Just look at this, compare it to the prior supply level. So definitely the supply level is a lot higher around this region here. So this is just a temporary commitment above the resistance level, and then followed by a failure back inside the range. So a very typical uptrust. So if we didn't see it coming, then definitely I think on this bar, there's the rejection. Let me clean this up a bit. So this is the rejection tail again, and that's also together with the relatively high supply level. So this is actually a very nice short entry just right after the close at this bar. Otherwise, I think anything somewhere around here on these few bars are very good short entry. Another potential short entry or to add into more short position is just right after the localized breakdown. So we kind of have a small trading range here. And this is the actual failure, the breakout bar with the spike of the supply level. And subsequently, we have a back test forming this last point of the supply. So this is the LPSY here, and back tested this resistance level, and then followed by a failure, reversal, and a sell down. So this is a very clean trade, and it's pretty much like a textbook style entry. And if I were to enter the trade somewhere around this bar here at the close of this rejection bar, then with a stop slightly above, maybe above the high here, somewhere around there, a few points, and I can definitely write it down with a trailing stop loss, at least on this level here, this bar here. So that will be easily a reward to risk ratio of 4. So I think if we trail along the last candle, which is this one, and eventually we'll get stop out at this rally here. So there's a relatively good rally up here. So this is how we got stop out. So this trade could easily achieve a reward to risk ratio of 4, and a very nice setup with a proper volume type of the signature together with the structural level of uptrust after distribution. But I just miss it due to my strong bias of going long. In this case, is I'm very bullish, so I just totally, well, somehow just didn't analyze it properly. But anyway, this was one of the potential trade which I totally missed out. And the actual trade that I took was somewhere around here. I anticipated a long entry, and this was based on a spring type of trade. So the orange level was the previous day low, and just right after the spring, so like this, so temporary commit below the level, and then have this kind of the reversal up, followed by a automatic rally. This is the best rally that I've ever seen out from this downtrend here. So subsequently, I just wait for the reaction to settle, and eventually you can see that the supply level has been exhausted, and we have the high low form here. So that's why I just enter my long position at this candle just after the close of the candle here. And eventually, just after this supply absorption, we have seen a push up, a rally up, attempt to rally around here. So we have seen this kind of the rally up, but immediately we have seen this rejection tail that comes with the increasing of the volume, and immediately we fail to commit above the previous swing high here, and this is another reaction down, and subsequently we have another attempt. So this attempt is this weak rally up. So this actually provided me a clue to exit the trade. Let me zoom in and elaborate a bit more here. So as we can see that the second rally here was actually with this first bullish bar here with this, and then this is the second bar here that comes with the increasing of the volume. So increasing of the volume to push the price up, and now we've got a small candle together with a rejection tail, suggested the presence of demand. And the next bar, the big bearish bar, actually confirmed the presence of the supply. So the presence of a supply actually showed up here, and that's why I just exited my trade right after the close of this bearish bar. So overall, instead of having a full -1 hour loss, as you can see, my stop was actually here. And if I were to hold on to this trade, eventually I will get stop out around 7:30 my time at this localized breakdown bar. So instead of having a full -1 hour stop here, I think I managed to reduce the stop to around -0.4 while exiting at this point here. All right, so overall, still a losing trade anyway, but managed to mitigate the the loss, I was relatively happy. All right, so let me just get down to the hourly time frame. Need to talk a bit faster because I think I spent too much time in the previous review session. All right, so let me get down to the current time frame in this H1 chart here. So far, I don't think we have anything threatening at the moment, but we just need to be careful about our bias because in terms of day trading, I think pretty much that is very best or to better to hold a neutral view so that we can always be prepared for trade to the upside or trade to the downside. So either trade is fine. So in terms of the immediate resistance, I'm still aiming at currently at 3310 to 3340, which was the previous gap area created a few months ago. And in terms of the immediate support level, I'm still watching at the round number 3300 level. So that's the immediate support level, 3300. In terms of the potential trade, I'm waiting for a test of this 3300 level, followed by a reversal up. Then that could become a potential long entry. Other than that, if it did not come down to the level, then we just need to rely on the smaller time frame structure and trade from there. All right, so I talk about the potential bias, the key levels, and the potential setup. And yeah, that's pretty much it for this video. Hope you enjoyed it and get something out from the video. And if you like the video, just click like and also hover to my name or picture to follow me. Do remember to subscribe to my channel so that you get instant notification of my future video ideas. So as usual, if you have any kind of the trade ideas you'd like to share with me, suggestions, or even just want to comment what have you learned or what other things you would like me to cover in detail, feel free to comment it below. I will reply to you. Thanks for watching. I will talk to you soon. Bye.